Hey everybody, welcome in. It is Thursday and this week has gone by so fast. Welcome in. And I got volume, which is awesome. So a lot of people are I've made at least one or two videos in the last month about catalysts, but this one is big. Let me explain why, and then we'll talk about which tokens are going to trade when they do open up in Hong Kong, and are they accessible by China? Yes, they are. And which ones will pump the most? That's what we're going to try to figure out here. But again, remember, I'm going to stress this at the beginning and at the very end. This is based on data and fundamentals. And not everybody in Cryptoland trades on that. But hopefully, the team in China do. So let's go and see what we can identify. Go through a bit of history. And of course, this is edutainment, sharing numbers. And, please subscribe to the channel. If you want to be armed for the AI onslaught, subscribe to IA. Things are coming fast. The world is changing fast. This is where you need to be. Every time I say that, people join. So let's go. First of all, this is important. Emerging nations are leaning on gold. And China has the largest foreign exchange reserves in the world and has been buying gold for 6 months straight. And this is a plan to help China challenge the US dollar. Now, economies in distress typically turn to gold when they have a hard time to prop up their currencies, and China is no exception. But why do we care? Because Bitcoin is digital gold. So maybe that's why they're opening things up to become more modern. Let's talk about a little more macro stuff before you get into the nitty-gritty of what this new law is, and then we get into the tokens. 3 parts to this video. So first of all, I remember you heard me back in January saying China was the most crowded trade. People were freaking out, say, how is that possible? Well, this is per the Bank of America research, Bank of America Global Fund Manager Survey, And China changed from an uninvestable, basically in 2022, to once they reopened, to being the most crowded trade in Feb 2023, again, according to this B of A study. And it's hard to fully believe, given out of all funds, that this was the case. But that has changed a little bit since then. I haven't seen the update from Bank of America, but again, it was the most crowded trade. MT, Zito, I see you guys out there. Thank you so much. Let's talk about money printing, because this is kind of very important, how much money there is in the economy. And you can see here, even though we know money printing is insane in the US, in China, the M2 is exploding. So that's kind of very much up and to the right. And you can see the US dollar in comparison. So it's pretty bonkers out there with exactly what they're doing. So they do need some hardness behind their money, perhaps. And remember, we care because Bitcoin is digital gold. And this is what I think maybe some of the key folks in Hong Kong and other places realize at this stage. Now let's look at a couple of things as well. Let's look at Bitcoin versus global liquidity. Global liquidity has fallen down because the US is tampering their money supply. It's down 4 or 6% year to date so far. And that's a big impact on this gold line cutting through the Bitcoin line. But normally when liquidity goes up, Bitcoin goes up. With a little bit of a time lag. Sometimes it's exactly at the same time. So crazy, crazy times here. But you can see here, liquidity has dropped off. But with all the stuff that's going on with debt ceilings, etc., being risen, and other economies around the world, like Germany, realizing they're in a recession, money printing will begin again. Pretty certain of that. And that will drive the prices up too. So we'll watch that carefully. Raoul Pal has this as well. This is Bitcoin versus GMI, global liquidity. And you can see the key correlation here. Bitcoin price and all crypto with adoption and global liquidity. Boom, they follow each other. So according to him, the liquidity is on the rise. But according to my TradingView chart, it is not. Either way, it is correlated and more liquidity is coming. That is for certain. Now let's talk about the China opening. Not only are they getting off their zero COVID policy, but Hong Kong retail investors will be able to trade cryptocurrency tokens from June 1st as the new, what they call virtual asset regime kicks off. This is huge. And again, Hong Kong is vying to be that new kind of financial hub of the world, along the lines with Dubai and other places. London's trying to get back in the mix, while the US is closing the doors to crypto with their choke point 2.0. But with the new presidential candidates, Hopefully that'll change in a year's time. Now let's talk about SFC and crypto. This is their regulation here. It's a regulatory framework for trading. And they want to make sure all the usual stuff is taken care of, like AML, cybersecurity. And they want to make sure, probably the most important thing is the fourth bullet here, retail investors can trade Bitcoin, Ethereum, and large cryptos, through licensed platforms. Code for no poop coins, ladies and gentlemen, which is good. So they are kind of maybe looking at fundamentals. And this video is really about fundamentals of the crypto that will be on that list. Let's also talk about Hong Kong crypto. Hong Kong has been dabbling in crypto since 2018. It's a major hub. There's over 100 crypto exchanges there. It's kind of insane, and it is a very positive development for the whole industry. And one last piece, again, I have to stress this, there is a focus on larger tokens. They want robust, Lindy-proven, real-world use case tokens here. You will not see some of your scam tokens or meme tokens in Hong Kong, so thumbs up to the team for doing that as well. In addition, according to CZ from Binance, China is buzzing after the CCTV airs the crypto segment. That little thing went around Twitter like crazy. A little lady news reporter talking about crypto, and it has everybody excited. Remember as well, China's been through a lot with the whole real estate crisis. Property values fell 65% plus. People lost their homes. People lost everything. So maybe they're buzzing because they want a new asset class to invest in, because real estate is now very risky. Gold is all being bought up by the government. And this is how big this zone is. Stunning amount of wealth. Hong Kong has about 2.8% of the world's wealth and a relatively small population for that. Lots of billionaires in Hong Kong, and I've been there many times. Beautiful city. And China has about 18.6% of the world's wealth. You add these two together, that's, north of 21.4%. And the rest of the world, 78.6%. So literally, this is over a fifth of the money in the world is in this little area here that people may think is a nothing burger, but it is not that at all. It's extremely substantial. In addition, as I shared before, I think a week ago, spot volume as of April 2023 for Bitcoin was all Asia pretty much. We're talking 81, 82% of the volume, trading volume, is out of Asia. This is massive. North America is a pittance compared, and of course South America and Europe are even smaller again. So at the end of the day, this area, China, Hong Kong, is massive. Then you have South Korea as well, Japan, also a lot of activity there too. So do not discount the impact of this region. That's why I am very excited about them opening up their markets. Now we're going to look at a whole bunch of data here as we do on this channel. Everything is data driven, no emotions. And these are the chosen ones, ladies and gentlemen. Now I'm going to go through a whole bunch of select elements from our crypto compendium and a smart contract platform profiler. But here, these are the ones that they believe will be listed on top exchanges. So they're going to be Bitcoin, Ethereum, Binance, Cardano, Matic, Solana, Polkadot, Litecoin, Avalanche, Chainlink, Cosmos, Ethereum Classic, XLM, which is Stellar, BCH, which is Bitcoin Cash, and Filecoin. They are apparently the chosen ones. There might be some that might enter as well down the line, but initially, some of the so-called large tokens from sources that we have pulled, that is the list. And again, we'll see exactly how it pans out, but they are the big guys hitting the market. Now let's look at some more, actually just pull up some more detail from this sheet here. These are sorted by market cap and their price. And you can see the big heavyweight is Bitcoin, 508 billion, followed by Ethereum, 214 billion. And the rest pretty much are crumbs. And that's all she wrote. So let's look at some more data. This is the ranking of these assets with fully diluted market cap divided by market cap to give a multiple. And you can see here, I don't track things like Filecoin, etc., but some of this data was very interesting for me to go through. Cosmos doesn't have a fully diluted market cap because they might issue tokens forever, so there is no way of calculating that. But the rest do. So Filecoin wins, which is not a good thing. That means there's a lot of inflation on the horizon for Filecoin, with that, again, their current market cap divided by fully diluted is a 4.8x. There are tokens that are, of course, worse than this in the world, but this is just for this particular study here. It wins the prize for being the worst. Avalanche is number 2 at 2.15x. Chainlink number 3, 1.93. XLM, Stellar, 1.87, etc. The key really is you don't want to be in this high area. The cutoff would be somewhere around, 1.5 or so. So that would mean Ethereum Classic down. They're all kind of fine from this particular ratio that we look at. Now let's look at the categories of assets that are included in these top assets of Hong Kong. First of all, 3 currencies, 1 data management platform, 1 file storage platform, 1 payment option, 1 scaling solution, which is Matic, and the rest are smart contract platforms, 8 of them. So this is kind of interesting to see that the vast majority are smart contract platforms, which is great. And maybe the folks in Hong Kong look at my channel because that's where I focus primarily, because that's where I believe the most bang for the buck will be in the future. In addition, let's look at inflation. These are some of the inflation numbers. Avalanche wins. Again, you do not want high inflation. 20.7%. Filecoin 17%. Stellar 14.6%. And Stellar has been around for years and years and years, and it still has such high inflation. And Polkadot 10%. The rest, kind of, Chainlink has come down a lot this year. Only 7.2%. Cosmos 5.5%. Solana 5.3%, and all the way down. Ethereum 0.5% because we take an average of inflation. It's not the current inflation, which means it would be actually deflationary right now. And Bitcoin and Bitcoin Cash, because it's a fork, have the same inflation rate. Cardano down there at 1.8%, Matic 2.1%, etc. So again, you want to be kind of sub 10% on the inflation, or else you expose yourself to a lot of price suppression over time. Let's look at trading volume. This is going to be interesting because I'm thinking about, okay, if money flows in, which assets can pump the most? So we have here the volume, 24 hours and change. See exactly what's going on, which ones are going up and which ones are going down. You've got things like the very low volume ones are kind of Binance, Bitcoin Cash, XLM, and Litecoin. In addition, the next one, which is very important, is whale holdings as a percentage of total supply. This is an interesting to look at. So what we did here, let me pop out for a sec so people can understand how these numbers work. We looked at the amount held by the top 100 wallets, which we can calculate for each one of these assets. Then we aggregate all of those whale holdings for the top 100 holders and compare it to the actual total supply, not circulating supply, total supply. So I want to make sure people are clear on that. And here you see Cosmos, we don't have the data for the total supply, so we couldn't calculate it. But then you have XLM. Stunning is at 88.4% is held by the top 100 wallets. That is not something you want to own because they're going to rain on you at one stage. Matic, 85%. Filecoin, 79.1% held by the top 100 wallets. Chainlink, 74%. Polkadot, 72%. Binance, 68.7%. Or is it 69.7%? I'm not sure, but it's very close to that anyway. Avalanche, 65.78%. And then Ethereum Classic, 49.52%. Ethereum, 43.34%. So it's interesting. Ethereum's been around for such a long time, but still there's a huge whale concentration in the top 100 wallets. Litecoin, 38%. Bitcoin Cash, 35%. Solana, 33.88%. I know it has a reputation for a lot of VCs and everything holding a huge amount, but that is actually not the case. This is the top 100 wallets, only 33.88%. Cardano, even better, 27.04%. And Bitcoin, 14.6% is held by the top 100 wallets. So that's an important one to know. Again, you don't want to be necessarily in an asset that has very large concentrations amongst the top 100 wallets. And this is a visual of exactly that. And it shows you how everything stacks up. Bitcoin being the winner, Stellar being the loser so far. And that red box are things I would personally stay away from in a data-driven way. Now, let's talk about the volume to move these things. So you need a lot of money based on daily volume to give these things kind of a pump. So, the daily volume to move things like Bitcoin could be quite high. It could be $15 billion to move it around. Ethereum, you need about 7 billion to move it around substantially. Litecoin, a lot less. But let's flip to the log chart on this so it looks a little bit more easy to understand, because once you take away the top two, it gets a bit different. Litecoin, you just need about 500 million, which I was surprised it's traded so much. Binance, about 400 million, etc. And then you go down to the smaller names. Solana needs about, I guess, 250 million. Cardano, 150 million or so, and all the way down the line. So the thing is, if there is a big narrative and a lot of money goes into one of these assets, the more money that goes, say for example, somebody's dropping $100 million, it'll pump these smaller names a lot more than it will the bigger names. And that's kind of the big message of what I'm trying to get across here. In addition, let's look at some crypto compendium scores. I will share the report later within the community, but here you can see where the average is for all of the assets that are in the large list for Hong Kong. And the average is exactly 6.6 or 6.5, I think is the average score. So you want to be above that. Things like Cardano are above that. Things like XLM are below it. And the average is highlighted there. So when you look at the interesting thing about this analysis, slightly more than half were above average. So the Hong Kong authorities have chosen good names, with the exception of 1, 2, 3, 4, 5, 6, which were not good names. And I'll share those names later. The smart contract platform scores, again, the majority were above that red line. The red line is exactly 5.05, I think, was the average of the score for these assets. The winner in this one is Solana. Matic is in the far left, and some of the others were not. Remember, Compendium score is very different to the SCP Profiler score, which looks at fundamentals for layer 1s and layer 2s only. That's the difference. Let's look at some year-to-date performance of some of these assets. Year-to-date, obviously Solana was beaten down hard in late 2022, so it has the most gains, up over 92%, even though the price action has been kind of stagnant the last couple of months. Bitcoin is number 2, Ethereum number 3, Cardano number 4, Filecoin number 5. Then at the bottom you have the languishing ones: Cosmos, Chainlink, Ethereum Classic, Bitcoin Cash, which is good actually, XLM, because again, even though the compendium score looks at tokenomics and structure and whale holdings and inflation and all that type of stuff, there's direct correlation between how these things perform and the score, which is super interesting. Now, over the last year, however, it's a little bit different. The best performer over the last year is Litecoin, and number 2 is Matic, number 3 is Cosmos, and number 4 is Binance Chain, then Ethereum Classic, etc. So it depends, as always, on the time frame in which you look at the performance of an asset. Anybody can pick a window of time and say, oh, this asset's going to do really well over the last 2.5 weeks, or 3.7 months, or 1.29 years. But just to share some examples, year to date and last year are interesting, especially considering we came out of that bear market. So let's talk about the conclusion right now of what could happen. Either way, it's good news. Money is going to come in. The Chinese and the folks in Hong Kong have a lot of money to spend. So the way I believe things will report, and I can do a follow-up 3 months from now and see exactly what's happened. Remember, a week from now, they're going to open up this trading. So I think a lot of money will go into heavyweights like Bitcoin and Ethereum, because they are the big guys and they will attract a certain amount of liquidity. And if the Chinese know fundamentals, they will seek out good tokens and avoid bad ones. They'll pick ones with good tokenomics, good ones with good SCP fundamentals, smart contract platform. Remember, 8 of that list are SCP platforms. Watch the volume, stay away from high inflation, and stay away from high whale concentration. That would be what I hope will happen, and it'll be so interesting to see. And who knows if they're all going to plow into some other names as well as we go forward. But remember, the final thing that's most important for you all to remember, I've shared this before, I love this chart. the importance of fundamentals in crypto. People still YOLO into meme coins. Thank you, KN, which have no fundamentals and they're all speculation. And then you have layer ones like non-meme coins. A little bit of fundamentals, but still a lot of speculation. So we don't know what's going to happen here in this market. We don't know where the money's going to go, but we will be watching it very carefully. So big thank you everybody for joining. I hope this helps. The good news is, again, Hong Kong shows the big names that have been around a long time that aren't scams. So that is a big, weight off my mind. And we'll see exactly what the Chinese investors do. Stephen Weston, appreciate you, buddy. So I hope you enjoyed that. Again, good times. Maybe, and hopefully June 1st, when the Hong Kong market opens, the debt ceiling will be solved as well. And then a rip your face off rally, which would be good for everything. So thank you all. And I'll see you all soon. And you can see this trade alerts on Patreon. Yes, I share everything I do in Patreon. And just if people are wondering why I hid some type of things, some of the data here, I don't want people to be offended if they are in love with their token and it gets a poor score on one of our metrics. That's why I'll kind of share it on the inside. So with that, thank you all, everybody. Love you all. And let's go China and Hong Kong. We'll see what they do. Bye.